Hey, how you doing? Welcome to Midas Letter RAW. We have a extraordinary show for you here. My co-host today is our CFA extraordinaire, Steve Misener. Steve, welcome to the show.
Thanks, James. Always a pleasure.
You bet. How are you doing?
I'm really good, thank you.
Awesome. We are going to talk to Alan Gertner today. He's the CEO of Hiku, which was the subject of a takeover bid by Canopy Growth Corporation announced yesterday. Somewhere in the neighborhood of $380 million worth of love to Alan Gertner and the crew at Hiku. Bit of a win there for them. Anthony Dutton is going to be here. He's the CEO of Cannex Capital, CNNX on the CSE. And he has been doing some amazing things. And who else have we got here today? Oh yes, Keith Dolo, president of Sproutly, is going to is going to be here today to talk about his company's. Oh no, that was yesterday. Never mind, that was yesterday. I'm looking at the wrong one. Anyways, so Steve, tell me what's going on in the macroeconomic universe.
Well, we're into the summer, so
the doldrums.
Yeah, a little bit of that. Yeah, a little bit of that. But news like the takeover yesterday of Hiku, I mean that's big news. That energizes the cannabis sector for sure, because people snoop around, and go, well, who's next? And it's the big guys, the whales swallowing the smaller fish. That can lead to excitement across the sector, consolidation. That shows some greater level of maturity in the sector, and leads to kind of helpful and healthy speculation.
Canopy was discussing the possibility of a forward split on their share structure a few weeks ago, and I'm wondering if they've maybe decided that, never mind splitting the stock, let's just go buy more stuff if we need more liquidity out there.
Well, that issues more shares ultimately.
Yeah.
But also remember that since they're listed in New York now, they're really evolving from a Canadian-only investor share base to a more international and U.S.-based investor share following. And stocks in New York tend to be quite comfortable. Investors are quite comfortable if shares trade in the $100, $1,000 range, $2,000 range. So to split a Canadian share dollar amount down to something lower really might be not the best thing on New York.
Yeah, well, the stock's up 3% today. It took the market, well, they didn't have much time to react yesterday. They announced it at about 3:30s, but clearly the market likes the deal. Stock's up 3% at this point to $39.24. The valuation, a 33% premium over the average close of the previous 20 sessions. That's pretty much standard in a smaller cap company like Hiku.
Yeah, I mean, it can be all over the map, but I mean, it's based on the strategic value. Hiku's not a big revenue generator now, as many of the stocks in the space, especially the smaller ones. But it's obviously about the rollout of their retail operation and the branding component on the Canadian focus right now. So, but the premium looks very fair, and obviously the controlling shareholders were comfortable, as were all the shareholders to tender, and they're getting a great currency in getting the largest cannabis stock out there.
Yep. Karim Malik's going to join us today. He's standing in as the interim CEO of Biome Grow, which is yet another new marijuana company listing imminently on the CSE. And he's going to have some interesting insight about what it takes a new company trying to elbow into the crowded space of market share of the big guys, so that'll be pretty interesting.
I just want to come back to the takeover premium as well. Another point that I think is noteworthy is that given that it's about a $400 million deal on a very large market cap, it means that Canopy shares went up. But sometimes when it's a smaller company buying another small company, there's an arbitrage play which takes down the shares initially of the acquiring company. So therefore, a larger premium needs to take place in the purchase of the target company to account for the fact that the currency they're getting may go down initially, whereas in this case, it's deemed a positive. It's not that large an issuance, even though $400 million is a size investment, but for an $8 billion company, it's just not that material, and it's all deemed good news. So therefore, exactly, so therefore there was no risk of the currency going down because of a more equal-sized merger.
Yeah. Do you think that the flurry of merger and acquisition activity on the part of the billion-dollar market cap cannabis companies is going to accelerate, leading into the actual onset of the recreational rules as they try to solidify their market share positions?
I think so. First of all, in some cases the valuations are not super undervalued, so it's good if you're running one of these companies to issue more shares to acquire. We also seeing this expansion of valuation by market cap, so the larger the market caps are, they tend to be a little more expensive, which gives them a greater edge to be acquiring the smaller and the micro cap stocks. So it's in their interest, and it's accretive from a business perspective to do so. And so I think and also just the timeline in this case, it may be quicker to buy things than to build them. I mean, we've had a 4-year build out, a 5-year build out in the space, but now that the currency and the capital markets are receptive, it may be much more strategically smart to buy rather than build. Yeah,
you bet. Okay, Steve, I'm going to take a minute here and I'm going to read the news of the day to the audience here assembled. Welcome everybody on YouTube. I see there's a whole bunch of you. Apologies to those who like to watch on Facebook. Facebook is having some technical glitch that is preventing their video streaming capability from functioning, at least for us, though it might be different for others. So looking at the news today, CanTrust, trading on the TSX under the symbol TRST, announced today that they have partnered with Australia's Gold Coast University Hospital to conduct a clinical trial using CanTrust CBD oil capsules. The 6-month randomized double-blind placebo-controlled clinical trial will be used to determine the efficacy of the capsules in slowing ALS and motor neuron disease progression in patients. That's the second G7 sort of trial that they're running now towards the regular, insurable drug sort of access for cannabis. The Supreme Cannabis Company, TSX Venture Fire, announced they have obtained Health Canada approval to commence cultivation on approximately 30,000 square feet of additional flowering rooms at its 7 acres facility. This new capacity is expected to double 7 acres, growing estimated annual production from 5,000 kilograms to 10,000 kilograms. MedRelief Corp, TSX listed LEAF, announced that they have received European Medical Agency certification for its Markham facility to make the first export of its products into Germany. Germany is poised to become the largest federally regulated medical cannabis market in the world with a population of over 82 million. Aurora Cannabis is going to be the owner of MedRelief. On that note, Aurora Cannabis announced that they are purchasing Canna Royalty's exclusive Canadian license to use and commercialize the pre-roll technology owned by Canna Royalty, developed by Wagner Demas. The $7 million agreement of Aurora common shares targets the high-volume, high-margin, pre-rolled segment of the cannabis market. Aurora also announced that they have established a partnership agreement with Evio Beauty Corp. The companies will collaborate to develop a line of co-branded hemp seed oil and CBD-infused cosmetic products. Invictus MD Strategies Corp, symbol GENE on the TSX Venture, they announced today that they have entered into a licensing and marketing services agreement with Authentic Brands Corp to develop a collection of cannabis brands that will launch initially in Canada and then roll out in key territories around the world. Invictus will tap into the ABG's portfolio to develop lifestyle-inspired cannabis brands that feature its products for patients and recreational adult users. Products will include dried flowers, oils, concentrates, and consumables that will be rolled out through Invictus's pun intended, I think so, wholly owned and fully licensed producer Acreage Farms Limited. That's interesting spelling of farms, P-H-A-R-M-S. WeedMD announced that today that they'd agreed with Hiku Brands to terminate their previously announced arrangement agreement to merge both companies. Obviously, in part or because of the Canopy takeover. We don't know for sure, but in connection with that termination of the arrangement, WheatMD got a $10 million break fee. Not a bad deal. That works for them. WheatMD also announced that they have appointed Keith Merker, currently the CFO, to the position of CEO effective immediately. Keith will be here tomorrow to discuss his new role in that capacity. Cannabis Growth Opportunity Corporation, trading on the CSE under the symbol CGOC, announced an investment in Sale Cannabis for $400,000. Sale is a secure, cloud-based cannabis healthcare decision-making platform serving clinicians and patients. That's the news of the day. Stevie, anything in there catch your eye?
Lots of excitement. I think lots of continued rollout of the development of the Canadian market, and things to keep investors keen and interested.
Yeah, you bet. We're going to talk to a couple of our people. Let's just say hello to our YouTube watchers. Maple Mike says he loves the show. King Caesar PNTV had an update in USA. Don't know what that means. YouTube Buoy GGBB923 is asking if this is actually live. Well, I guess you got your answer. We're actually live. Ben Smith says live is good. Ben, that's not our Ben Smith, is it? Ben, it is. Is that you, Ben? Wave or something if it is. Anyways, Modern Picasso is here as usual. Mr. Lou 1990, first to the party. Thanks for joining us, guys. On the Hiku deal, it was interesting that the equivalent was $1.91 per Hiku share. And that kind of generous 33% sort of premium is something that we're going to see more of, I guess, especially in the cannabis space. Now, we've seen Aurora doing a lot of takeout activity on these bigger companies. This recent acquisition of the technology for pre-rolls is not really significant in a meaningful way because it's only $7 million worth. But the MedRelief deal, that thing is getting closer to closing. The vote for Aurora shareholders coming on the 18th this month, and really a formality because 56% of the MedRelief shares have already been tendered to irrevocable lockup in favor of the deal. Obviously, the insiders making sure that this deal goes through. Absolutely. And they get to spend the summer on holiday. So
interesting on the Hiku deal, when you add the 3% on Canopy Growth shares today, that makes it close to $2.
That's true. They're already. So I asked Alan when he was here if he was celebrating. He said no, there's too much work to do, and they're fully committed to the the growing of the brand under Canopy now. Why don't we cut to that interview? Oh no, actually, sorry. Which one, Suzanne? Can you tell me which one we were going to cut to first?
Hiku. You were right. Hiku.
It was Hiku. All right. So here's the conversation I had with Alan Gertner of Hiku just a few minutes ago. Hey, good day and welcome to Midas Letter Live. My guest in this segment is Alan Gertner. He's the CEO of Hiku Brands, trading on the CSE under the symbol HIKU. Alan, welcome back.
Thanks for having me again.
Alan, big news of the day. Let's cut straight to the chase. Canopy has made a takeout offer for 100% of your company. Tell me about how that deal came together and if it's good enough for you.
Yeah, it's really tremendously exciting. I have the utmost respect for Canopy and the work that they've done to date and their path ahead. Here's a situation where we had the opportunity to become part of the world's leading cannabis company and take what we've been doing for the past 3 years, building brands, building a strong retail presence, creating great craft product, and take that to a whole new scale.
Yeah, you bet. So I found it interesting because Hiku was part of a tie-up with WheatMD, which has now been terminated. But in the process, you have acquired Tokyo Smoke.
Right.
And that's always been interesting to me because that was originally sort of sponsored by Afria and Vic Neufeld, and so now it's ended up in the Canopy camp, and that's kind of interesting. But so what is the main attraction of Hiku at this point for Canopy?
Yeah, that's a great question. I think one thing we have at Hiku that's incredibly valuable is a really strong team. We've been lucky to put together a group of individuals that I think are a rarity in the cannabis space. Strong, focused, great experience that's incredibly relevant to the world of CPG, incredibly relevant to the world of retail. Ultimately, I believe retail will be the key to success in legalization. It will be the opportunity to talk to consumers, help them understand brands, help educate them about legalization, and we can help Canopy do that even better.
Yeah, you bet. The valuation struck everybody in my immediate circle as spectacularly generous. And so was that a requirement of on your part in order to sort of shake loose from the WeedMD transaction, or was that more just a case of Canopy not wanting to have to deal with repeated increased offers?
No, we've worked very hard to do what's right for our shareholders, and we're lucky to be in a situation where we feel like we delivered tremendous value, and we still have a lot of value left on the table that we believe we can add to Canopy.
So is Hiku going to remain Hiku, or is it going to be folded into the Tweed Main Street or one of the other brands?
I think it's still early days, and we're working through all of that, but Canopy believes in the value that the brands that Hiku has created. If you think of Tokyo Smoke and Doja and Vanderpop and Maitri, we have some leading brands in the space that we think fit incredibly well into the Canopy portfolio.
Okay.
And so there's a chance to bring those brands to a larger audience.
Sure. Some of our audience might not be familiar with those brands, so if you wouldn't mind, can you just give me a quick overview of each of them and what their product line is?
Sure. So we have Tokyo Smoke. That's our most retail-focused brand. The brand started in Toronto by my father and I. We have Doja, a brand focused on the Okanagan and the incredible cannabis product that comes out of the Okanagan. The Okanagan's in British Columbia, for those who don't know. We have Maitri, a brand based in Montreal, created by two young gentlemen who have an incredible passion for cannabis and creating a brand for their lifestyle and about them.
Maitri?
Maitri, yeah.
Okay.
And you have Vanderpop. Vanderpop's created by April Pride. April created this brand to help educate women who want to use cannabis to improve their lives, and want to use cannabis to help them with understanding self-care and how cannabis can enhance their lives and their journey. So you have these four brands with these different segments that we believe can add a lot of value in the marketplace going forward, and we're excited about showing them off with Canopy.
The move at this point on Canopy's part to acquire Hiku is interesting because a lot of the cannabis brands that your sub-brands sort of lean towards representing are not exactly going to be legal in the first round of the recreational rules in terms of access.
I don't know. What do you mean?
Well, for example, the coffee shops, you can't actually go in and legally order a recreational cup of coffee with a dose of THC in it.
Correct, but I think that's missing the point of the coffee shops. The coffee shops give us this opportunity to educate in a way that today no other cannabis brand does. I have a full-scale retail team that has built a presence across Canada and interacts with consumers on a day-to-day basis. The community that has seen our brands, that have interacted with us, is tremendously large. And if you think about the first OCS purchase that you're going to make around the corner and walking into that store and not knowing what to buy, well, one brand you've had interaction with, if you live in Toronto, is Tokyo Smoke. And we think there's a lot of value there.
So it's not like a customer walks in and says, "I'll have a latte, please," and the barista says, "Would you like to smoke a joint with that?"
Not at all, but you can come in and have a latte, and there's lots of education in the space. And we host education events in those spaces on a week-to-week basis, whether it's how to roll a joint or how to understand CBD versus THC.
Oh, interesting. So it is pro-cannabis use advocacy.
No, what it is it's pro-responsible use advocacy. We ultimately believe that education is key for Canadians understanding how to integrate cannabis into their lives, for those who don't already know.
Oh, interesting. Now, Doja was in late-stage applicant for...
It actually has a sales license.
Has a sales license, so they're a marijuana producer.
Correct.
Oh, so interesting. So it seems like, why would Canopy want another cannabis producer, or is that just a bonus part of the Hiku package? Well,
I think the Doja team is incredibly strong, and being in the Okanagan, you have a lot of people who have great knowledge of cultivating cannabis, and the facility that they've built in Kelowna produces small batch craft cannabis that we know has a market. I mean, one thing we've seen in the U.S. is high quality indoor flower is well insulated from price compression. So there's value in that facility.
Sure. Some investors might be concerned that the acquisition of Hiku is going to represent a selling event for Hiku shareholders in Canopy's stock. Are you restricted at all from selling any of your position or any of your major shareholders?
I'm committed to Canopy. I really truly believe in the future ahead for that business. I believe in Bruce Linton, I believe in Mark, I believe in their team. I'm excited to be part of it, and I'm excited to be along for the ride.
Okay, very diplomatically said. So what is so how many coffee shops in, for example, Tokyo Smoke now?
Today we have nearly 10 retail locations in the country.
10?
Yeah.
Okay, I know there's 2 in Toronto.
I know we have way more than 2 in Toronto.
Oh, okay.
Today we have at least, what do we have, 4 or 5 in Toronto?
Oh, okay.
Already?
See,
I've lost count.
I got to get out to these things more often.
We have one just around the corner from here.
Oh, is that right?
Yeah.
Okay. Where exactly?
So we have one in the Assembly Food Hall. So that's
right.
in the 111 Richmond in the Google
I
building.
will come by and have coffee.
Great, I would love that.
Yeah. Okay. So then, I guess from an outsider looking in, the obvious advantage for Hiku and its shareholders is now you've got access to the largest capital pool in the cannabis space in the world. So is this potentially going to catalyze a globalization of the Hiku brand and the brands associated with Hiku?
I've said since day one that someone in this movement will be Starbucks. Someone will be the definitive modern retail player. We sometimes forget that Starbucks played an incredible role in educating the masses about a boutique coffee experience, about a third wave coffee experience. We think someone will do the same with cannabis. This gives us the opportunity to make sure that we deliver on that thesis and that the definitive modern retail player comes out of Canopy.
It strikes me as a overt sort of contradiction that one would try to associate cannabis in a coffee shop. Coffee is a stimulant and very much a kind of a, it's more of a psychological tool for people on their way to work, for people getting their day going, whereas cannabis is kind of like at the other end of that scale. It's to wind down the day and take the day to a different place psychologically, arguably. But again, there are all kinds of applications for use of cannabis in between that I'm not really paying tribute to.
I have two major points to make on this. One, the beauty of a coffee shop is a place of community, and it gives us this opportunity to educate a community and build a safe space for people to talk about cannabis. Legalization is happening, and it happens to 100% of Canadians. So to give 100% of Canadians the chance to engage and talk in a safe space is powerful, and I think a coffee shop serves that purpose very well. Second thought is coffee is also a psychoactive. It's an adopted psychoactive that is part of our lives, that we've come to understand its use and understand how it can play a role. And I believe the same thing will ultimately happen with cannabis.
Fascinating. All right, Alan, that's a great update. Congratulations on the transaction.
Thank you very much. Thanks for having me.
We'll be back to talk to you when we next have the opportunity. Thanks for joining me.
Great, I would love that. Thanks again.
Steve Fraser in the control room there had an interesting point that, people tend to not really understand what's happening around a merger with a company's share price. For example, the press release stated that they were paying a 33% premium over the 20-day average weighted closing price of Hiku shares in the previous 20 days. And so there's some, the stock's up 20, 30 cents today, but that's still not reflecting the $1.91 valuation claimed by Canopy in the press release. So how do you reconcile that from the viewpoint of an individual retail investor?
Well, it's all every deal is obviously subject to its own specific terms, and in this case, there's a new variable or an extra variable because the purchase is not for cash. If it takes 3 months to close a deal or 2 months to close a deal to get all the regulatory approvals and all the accounting through, if it's a cash number, if it was $1.91 per share that Canopy Growth was paying for Hiku in this example, but this is generic, it applies to all takeovers, then you'd know that it was always going to be $1.91. In this case, you're going to get shares in Canopy Growth. The prospects look attractive. The stock's up 3% today, so that takes the value up to $1.97 per Hiku share ultimately. But because you don't know exactly, no one knows where Canopy shares will be trading in 90 days, there's that variable in addition to the general deal risk, and any deal is subject to deal risk. The deal's friendly, the controlling shareholders want to sell, the other shareholders likely want to sell to Canopy, and they're getting great stock and a great company to go forward. So it would be deemed that the deal risk is relatively small.
Right.
But any deal can come apart, and that's why Hiku shares are not trading all the way up to the stated deal value of $1.91 today.
So by that logic, then you would expect that the closer it gets to the closing of the deal, the more closely that stipulated premium will actually pan out in the share price of Hiku.
Absolutely.
Yeah.
As time goes by, it always closes the gap.
Okay, one of the interesting topics that you brought in with you today, and which I think is interesting because, you know, we've got commodity prices all taking a dip down today, and when that happens, you know, it's kind of a deflationary sort of moment, and largely indicative that the big money is anticipating a worsening of the conditions that I think we agree are kind of being exacerbated by the growing trade war with China on the part of the U.S. China just announced another $200 million worth, or $200 billion, or sorry, the U.S. announced $200 billion more worth of tariffs against Chinese goods. The Chinese goods have said, okay, hold on a sec, we're not going to go half-cocked here, which is a very Chinese approach. But so in terms of commodities trading, why is AI, first of all, how is it that AI is not already part of commodities trading? Because I thought, you know, advanced intelligence or artificial intelligence had taken over every aspect of trading. And why is that significant for commodity prices?
Well, it may not be immediately significant for commodity prices, but it may lead to more volatility in commodity prices. And if we look at historically and presently, we have interest rates and bond prices. Speculators are using a lot of machine language and algorithms and math experts to try to load the system so that they can make their decisions. We also see that in equities, and we see it in currencies. So what the trend that's taking place is that commodities and oil and general metals and commodities have not employed the same electronic techniques of data collection and algorithm analysis to do rapid trades. Commodities historically have been more of a gut instinct trade with traders, and they've been very territorial, they've been very careful to keep that information to themselves. So we're seeing that commodity traders now are trying to now adopt some of the artificial intelligence and algorithm efforts to get an edge.
Yeah. So do you think this is going to make commodity pricing in real time more efficient or more volatile as, you know, artificial intelligence comes to bear, algorithmic trading, high frequency trading? Does that mean there's going to be more sort of scalping going on in the pricing of commodities trade, or is it going to be the opposite, better efficiencies?
You know, I would say that efficiency and volatility may not be completely linked together. Efficiency in terms of the rapid deployment of information, and that's where the commodity traders have lost their edge. I mean, oil traders used to make 50% a year on their capital or much bigger, but because of the widespread availability and instant dissemination of matters related to commodities, for instance, with oil, weather prices or weather issues, whether it's cold winter or forecast or cargo loadings, etc. That used to be in the realm where commodity traders and oil traders had that information to themselves for a while, so they could get their stock positions on, and you could say that gave them more effort to scalp, to use your term. But now it's all out there, so they need to employ some of these new technologies to keep their edge, because their margins have shrunk.
All right. You know, we've been watching commodities sort of come back and take a beating and come back and take a beating, and the price of oil has recovered to $70, which is where it starts to make a lot of sense for a lot of companies and become more of an economic engine as opposed to a drag on the economy. The evolution of Canada's dollar woes is tied to the poor performance of petroleum over the last couple of years, but now that petroleum has recovered, we aren't seeing the uptake in the Canadian dollar, and why might that be?
Well, first of all, I'd say that the decline in the Canadian dollar versus, say, the U.S. dollar and other currencies is not solely because of the decline in oil prices. There are other political and economic and deficit factors that international investors are not favored to. However, Canada has always been deemed to be a petrodollar, and international investors look at Canada as being a big oil net exporter. But a couple of issues. First of all, besides deficit spending, which is negative drag on the dollar, and fiscal policy, is that a lot of Canada's biggest export market for oil is the United States, and the United States has ramped up their oil production dramatically. So they don't need our oil as much, and we have all these pipeline issues and shipping constraints, so that's not helping with what should be an improved buoyancy in the Canadian dollar. When we've had this recovery, it was 10 years ago last month, we had $147 all-time peak in oil. We got down to 28 or 29 a few years ago. We're at 70. That's a nice big recovery, and we still see runway from here. However, we're not getting the same bounce in our oil sales because the Americans don't require it like they did. We have to find those new export markets, and we have shipping constraints already.
Yeah. What are the chances that instead of a petrodollar, we become viewed as a cannabis dollar?
I think that could be in play already. I mean, Canada's the leader in global cannabis, investments and cannabis legislation in many ways.
But that implies that the cannabis industry, as it evolves into the global industry, is going to have an uplifting impact on the Canadian dollar.
Absolutely, and it's not only Canadian investors that own cannabis stocks. We know there's been big European participation. We've had American participation as investors, and when they want to buy shares on the CSE or the TSXV, they need to buy them in Canadian dollars. So that means they have to sell their currencies and buy Canadian dollars. That's an upward pressure or an upward benefit to the Canadian dollar valuation.
Bet. Yeah. Okay, I'm going to have a quick chat now with Anthony Dutton from Cannex Capital Corp, which trades on the CSE under the symbol CNNX. And if you're not familiar with Cannex, Cannex is the largest producer of cannabis products in the state of Washington, and they have just made some inroads towards acquiring one of the largest extractors in California. So check this conversation out. Welcome back. My guest in this segment is Anthony Dutton. He's the CEO of Cannex Capital, trading on the CSE under the symbol CNNX. And if you don't know anything about Cannex, they are Washington State's premier grower and are expanding into a multi-state play in the western United States. Could it be? Anthony, thanks for joining us today.
Thank you very much for having me again. Always a pleasure.
Yeah, always a pleasure. Anthony, you're sort of halfway through a transaction with a company called Jetty Extracts.
Jetty Extracts, yes.
And they are by all accounts, a well and truly respected brand of extract products throughout the state of California.
Correct. They're one of the largest extraction companies in California, based in Oakland.
Yeah.
They have very wide distribution through their own distribution network. Mm-hmm. They also have 5 of the top pack SKUs, which is pretty impressive.
What is a pack SKU?
Well, packs being the vape hardware.
Okay.
Jetty produced the pods for them, which are then distributed under white label to packs.
Oh, okay.
So, as we see the market moving more and more to derivative products,
yeah.
We saw vape, being a key segment for us. It's
right.
About 50% of new consumers come in and enjoy a vape as opposed to smoking a dried
Spliff.
flower or a spliff.
Sure.
or what have you. And the market in California is obviously incredibly important. It's a huge market. It's bigger than Canada.
Huh.
It's a very strategic market. I think we've talked about this before, but all of the brand names that will ultimately evolve to be dominant players in the global cannabis sector, we believe, and many others as well, that they'll have their DNA in California. California, for that reason, is a place we wanted to be, and we wanted to be in a big way. So Jetty fit with that strategy perfectly.
Very cool. And so what do the metrics of the deal look like?
Well, we've acquired them for $22.5 million with $7.5 million of earnouts, $25 million worth of shares, and $5 million worth of cash.
Okay.
We expect that transaction to close this quarter. We talk to them virtually every day. We're already beginning, what I call substantive business operating relationships. They're a fantastic team, and we're very excited about working with them.
And what does their balance sheet look like?
Their balance sheet right now is provided primarily by ourselves. We extended them a $2.5 million convertible loan on signing of the transaction. I think we discussed this the last time I was here, actually.
Sure.
That will, collapse upon closing of the transaction.
Right.
But again, it speaks to the thesis of what Cannex is. Cannex is a public holding company accessing capital through the Canadian public markets to deploy into, opportunities that we see a great return on capital. So Cannex's balance sheet will effectively be Jetty's balance sheet, and obviously it's the balance sheet for our operators in Washington. And as we move into subsequent states, which we plan on doing later on this calendar year, again, the same thesis will hold through, that Cannex, as the public holding company, will provide the capital, access to capital, and primarily the public market management requirements. We don't, in Vancouver, where I'm based, we don't get involved in the day-to-day operational aspects of our operating companies. We partner with phenomenal operators and sort of set them loose to do what they're good at.
Yeah, you bet. All right, so you guys are cash flow positive.
We are.
And it surprises me that, looking at the stock chart, that the market just obviously is not putting much of a premium on cash, which is really strange. And why do you think that is?
Well, I think it's a combination of things. And we've talked about this a lot. But when we came to market about a year ago, we thought, and the whole market thought, that the way to access the U.S. market, which is kind of a quiet backwater 12 months ago. Everything has changed in the last year. That the right way to go at it was to acquire, a dominant position in one state, and then move into another, and then do another, and move through it incrementally. And what's happened over the last 6 months is that several of the bigger names, I'm sure you've spoken to some of them, they assembled their multi-state platform, as I call it, before they went public. So now they are a multi-state player as a public company. Once we close the Jetty acquisition, we will now be a multi-state player, and then obviously with additional irons in the fire and hopefully a few more acquisitions in the next 12 months, we will then become sort of back in that multi-state narrative, you will. So the price that we're at today, as far as I'm concerned, represents the most phenomenal opportunity out there to participate in an emerging, profitable multi-state platform.
Okay, so is your intention to keep Cannex US focused, or are you going to look at other jurisdictions? Is Canada in the mix anywhere there?
That's a great question, but I think for the time being we're going to focus on the U.S. I mean, the U.S. is clearly where all the excitement is. It's where the investors are gravitating to. And so unless we find some, exceptional opportunity that falls outside of the U.S. boundaries, if you will, which there are a few, but unless the value is so good that we can't turn it down, I think that 90% of our time is going to be focused on the U.S. You've seen some of the other names I know that have been sitting at this table, and the U.S. is very, very active right now. The barriers are coming down, the players are coming in, the capital is flowing in, and so really we think we're incredibly well positioned with a dominant place in Washington, an emerging powerhouse in California. I mean, Jetty is a very highly regarded company in that state, and we think they're the best opportunity that we could find as a California, what we call California beachhead.
Sure. To what extent is the banking community sort of bringing down the barricades that had previously made it tough or impossible to be a multi-state player?
Yeah. Well, I don't think you're going to find in any near term where you're going to have a national bank providing commercial banking services to the cannabis sector. So in Washington, we work through a credit union. The banking relationships in California are also quite unique, although the California state legislature, I believe, recently proposed a state bank exactly for this purpose, to bank the cannabis sector.
The California Cannabis Bank.
Something like that.
Boy, where do you get shares in that?
I also know that, there's quite a lot of discussion going on in Washington, D.C., where some of the federal banks, the federally regulated banks, are looking for state waivers, for example, where they can provide commercial banking services to the cannabis sector, because it's a $50 billion a year business. I mean, if you're a banker, you would like to provide banking services to that industry.
Yeah, you bet. What about the sort of availability of deal flow and opportunity? How many Canadian companies are actively down there in every state where cannabis is making progress towards legalization? everybody's looking for, you know, these profitable, successful brands that already have a huge customer database. Is it becoming more competitive, and is that going to drive up the cost of acquisition for companies like Cannex?
It is becoming more competitive, but I think that there's a sufficient number of players that the price won't get driven up too high. And you know, in terms of quality of deal flow, which is really kind of more important than quantity of deal flow, you know, Ron Gershoni, who's the CEO and founder of Jetty, is incredibly well plugged in California. So if anything is coming to market, he would typically see it before anybody else. One of our other founders, Leo, who runs the Washington State operation, same thing. You know, he's got quite a high profile, so he typically gets shown things quite frequently. And then lastly, you know, our investment bankers, Beacon Securities, you know, after they took us public, which at the time was the largest RTO financing on the CSE for a US-focused company, I mean, their deal flow is just incredible. So, you know, we're not short of deals, put it that way.
Yeah, okay, great. Let's leave it there for now. We're going to come back to you in due course and see how you're making out. Thanks for joining me once again.
Thanks very much.
Hey, what do you think? Cannex, Washington, multi-state player. Ooh, boy, I think there's an opportunity there, Stevie. What do you think? In the Canadian companies that are swooping into the United States and agglomerating all of those single dispensaries and grow ops and extractors and cookie makers and candy makers and putting them all into one company and listing them on the CSE. Do you think there's a play there?
I do.
Do you think that there's an opportunity that might actually one day suck the wind out of the Canadian operators who are Canadian listed as they run to the United States, as that market starts to get up ahead of steam, as the sort of recreational rules take over more and more states?
No, I don't believe that it has to be a zero-sum game, that there has to be a loss to offset more investor interest. What will happen is that at some point these U.S. operators who are getting the initial listings and funding in Canada, what will happen, I believe, is that the listings will then take place in the U.S. and they'll get U.S. investors to follow them. But that doesn't necessarily mean that the money has to leave Canadian waters.
What do you think that the impact of the sort of burgeoning, bubbling, erupting global trade war could have on cannabis? I mean, if we look at what's going on, this front and center of the attention today is on what's happening with China, where, you know, the U.S. has added another $200 billion worth of tariffs onto, or rather $200 billion worth of Chinese goods. Where's the end of that?
Well, I don't know that it's necessarily immediately a cannabis issue, but it certainly
maybe if they both smoked cannabis, they'd stop, you know, ratcheting it up.
There'd be more love. There'd be more love.
That's the problem.
We all just get along.
Yeah, exactly.
I think it's a war of words mostly, even though the tariffs are actually going on, but they won't last very long. I think it's a negotiating ploy. I mean, that's, you know, Trump's art of the deal, and the Chinese have certainly been taking advantage of open open markets, as the Japanese and the South Koreans have for a long, long time. They've put up non-tariff trade barriers into those Asian countries where it was hard for North Americans to ship product in, and yet it's been very open and accessible. So I think it's a negotiating ploy. I don't think it's going to last that long, but sentiments are significant, and that is leading to some concerns on the commodity front with pullback in copper prices and other commodities that even at the margin, because commodities are priced at the margin, the slightest economic hiccup, even if it's a brief quarter or two, can affect commodity prices negatively.
Yeah, you bet. So do you think that the how much is Canada dependent on the U.S. trade in auto parts?
Well, I don't know about auto parts specifically, but my rough numbers, I think Canada, if I have it right, Canada produces about 30% of all North American made autos in one fashion or another, but we only buy about 6.5% of autos. If again, those are rough numbers, don't hold me to them. But so Canada is very exposed to this trade risk because we're obviously net exporters of automobile, and that's really the core of our manufacturing in Ontario particularly. So that needs to be resolved. It needs to be resolved quickly.
Mm-hmm. All right. Well, let's take a look at our cannabis index right now. And we're looking at the index is up 0.79%, obviously led by Canopy Growth, which is up 3% at this hour. And let's see what else is going on here. Let's go to the index page. Best performer of the day today on the big index in Canada is weed, up now actually 2.39%, so starting to sell off a little bit more. MedRelief is up 1%. Auxly Cannabis is up almost 1% to $1.07. CanTrust up 0.52%. If we go back and take a look at now, let's look at the small cap index. These are all companies trading in Canada in the cannabis business with between $100 million and $500 million in market cap. The top of that heap is Supreme Cannabis, symbol FIRE, up 2.53%, obviously on the announcement that they're doubling production at the Kincardine facility. Namaste has been in a bit of a slow burn sell-off here. If we take a look at this chart, you know, look at that. Just had all this energy and momentum back in late last year, early this year. But this is a common pattern, I guess, that we're seeing now.
It is.
But, you know, Namaste really started to look like it was going to join the big leagues, and now it's struggling along. Afria is doing pretty good. Well, it's still 1196. You look at this chart in oh, that's not looking that great. I don't think that chart works very well in this particular.
Things were very quiet, remember, last summer as we went into August on some of the main market leaders. Obviously, they've had huge returns since then, but yeah. We are heading into that October 17th date, and I think that there will be renewed interest and excitement come September once the summer quiet period's over.
You bet. Let's take a look at the venture-listed stocks here. Who's the big trader on the venture stocks? Organigram is the largest by market cap. Let's see quickly. Organigram just came off of our... Oh, there we go. A little bit slow there. 256,000 shares traded, last at 501. Market cap 624 million. So I don't know why this is on the small cap index. It should be on the large cap index.
Yeah, market cap more than 500.
Yeah,
right?
Exactly. So that's misplaced there. Let's see, who's the best trading on this index today in terms of, wow, GTech Holdings up 6 cents to 80 cents.
Yeah.
This is one of Eddie Molesky's favorite deals.
Recently went public about 3 weeks ago.
Yeah, and it's good to see it turning around a bit here. Well, that's not a good look. Arch Bio Partners up 7.69%. I don't even know what Arch Bio Partners does. Let's take a quick look here and see what their press releases are saying. So they've got 53 million shares out. They just got 300 grand from the exercise of warrants.
Yes.
That's, I guess, something. So it looks like...
Companies love when warrants get exercised because they don't have to pay fees.
Yeah.
They don't have to pay commissions and fees when that money comes in, and it just magically arrives from the transfer agent.
Yeah, that's interesting. But let's see. Okay, so pretty quiet day across the whole cannabis complex here, I'd say. Nothing really jarring happening. I guess the big news of the day is the acquisition of Hiku by Cannabis and the subsequent blocking of the Weed MD takeover by Hiku. So yes. Very interesting. We're waiting for our guest, Karim Malik from Biome. Suzanne, you came out and indicated that there was a problem. Is there? Are we going to have Karim in here yet today?
Not likely. We'll have to shut down due to technical
All right. Well, so that's going to conclude our broadcast today because we're concluding thanks to some technical issues. So thanks for watching. Hit the subscribe button if you want to see us fail again. As I say, this is a work in progress, but thank you anyways, everybody, for watching.